Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
We received confirmation that the latest reciprocal tariffs will not be imposed on Canada. At the same time, President Trump confirmed that the tariffs announced last week against our auto industry will come in, and indeed have come into effect today. So while it's progress that further tariffs were not imposed on Canada yesterday, the President's actions will reverberate here in Canada and across the world.
A major global shift is unfolding, and it all starts with oil. For decades, Canada has been tightly connected to the United States when it comes to energy, especially crude oil. Almost all of Canada's oil exports flowed south to American refineries, often at discounted prices. But now, that long-standing relationship is being tested like never before. In a bold and unexpected move, Canada has begun redirecting billions of dollars worth of crude oil to China. This decision has not only caught the U.S. off guard, but it's also happening at a time when American gas prices are rising rapidly, making the impact even more intense. At the center of this energy transformation is the Trans Mountain Pipeline expansion. This massive $34 billion infrastructure project officially came online in May 2024. After years of political delays, court challenges, and environmental protests, the pipeline now has the ability to carry nearly 3 times more oil, from 300,000 barrels per day to 890,000. What makes this pipeline unique is that it connects Alberta's rich oil sands directly to the Pacific coast, allowing tankers to head straight for Asia. It's a new doorway to the global market, especially to energy-hungry countries like China, South Korea, and Japan. China, never one to miss a strategic opportunity, moved quickly. One of its largest refining companies, Rangsheng Petrochemical, went straight to Calgary and signed a powerful deal with Suncor Energy, Canada's top oil producer. The agreement ensures that regular shipments of Canadian crude oil will start heading to Chinese refineries every month starting June 2025, but that's only the start. Rangsheng is also approaching other major Canadian energy companies like Cenovus, Canadian Natural Resources, CNQ, BP, and Shell, aiming to secure long-term deals that could lock in a steady oil supply for years to come. China's influence is growing deeper than just buying oil. Chinese companies are now investing in Alberta's energy infrastructure. They are setting up local offices, building trading hubs, and gaining access to new logistics networks. This means they can not only receive oil shipments, but also control how and where the oil gets delivered. If oil prices spike in Japan or India, for example, they can redirect tankers mid-voyage to maximize profits. This kind of flexibility gives China a powerful edge in the global energy market, while the United States watches its influence slip away. Things escalated quickly after former U.S. President Donald Trump publicly condemned Canada's actions. Furious about the deal with China, he called it a betrayal and warned of imposing a 10% tariff on Canadian oil and gas. This threat shook up an already fragile relationship. For many years, the U.S. consumed over 98% of all Canadian oil exports, which meant Canadian producers had little choice but to accept lower prices. But the tariff talk was a turning point. Canada responded by pivoting sharply toward Asia, opening up entirely new markets. China alone is expected to import more than $104 billion worth of Canadian oil over the next 10 years. American consumers are already feeling the effects. Analysts at Goldman Sachs estimate that gas prices in the U.S. could jump by as much as 80 cents per gallon. The reason? U.S. refineries are now scrambling to replace the heavy crude oil they used to get from Canada. They're being forced to look to other countries like Saudi Arabia and Venezuela, where oil is not only more expensive, by around $5 to $10 per barrel, but also less reliable due to political instability. Meanwhile, Canada's oil is commanding premium prices in places like South Korea and China, where demand continues to grow. But the oil deals are only one part of a larger energy transformation. Canada is also preparing to launch its $40 billion liquefied natural gas LNG project called LNG Canada, which will begin shipping gas to Asia by late 2025. This project alone will send about 14 million tons of LNG every year across the Pacific. Even the hydroelectric power that Canada currently exports to the U.S., worth about $2 billion in 2024, might eventually be redirected to other buyers. It's becoming clear that Canada is no longer focused on serving just one customer. It's building a diverse, global energy portfolio, with Asia as a key focus. In Washington, alarm bells are ringing. Trump has declared that Canada's partnership with China could threaten U.S. national security. Yet, in Canada, Prime Minister Justin Trudeau is already investing billions into new programs to help exporters reach overseas markets, including a $6.5 billion global markets accelerator. Meanwhile, opposition leader Pierre Poilievre is pushing to revive the Energy East pipeline, another massive project aimed at sending oil to Europe to meet their growing energy demands. Canada's decision to expand its reach marks a historic turning point. For a long time, the U.S. took Canada's energy for granted, believing the supply would always be there. But Canada has made it clear. It's ready to take control of its energy destiny. With China securing long-term contracts and more oil flowing through the Trans Mountain pipeline each day, Canada has stepped into a new role, one that puts it on the world stage, not just as a supplier, but as a strategic player. American drivers are already paying the price. Some parts of the country are seeing gas prices jump by 70 to 80 cents per gallon almost overnight. U.S. refineries didn't see this coming and are now struggling to secure enough supply. As they turn to costlier and more uncertain sources, the impact is spreading across the economy. Canada's oil, meanwhile, is heading east, where it's welcomed with open arms and high prices. For China, this is a masterstroke. With every new shipment, it reduces its dependence on Middle Eastern oil and strengthens its hold on global supply lines. Canada's oil is thick and heavy, and China's refineries are perfectly built to process it. Plus, the oil is coming from a politically stable country through a safe and direct Pacific route. It's a strategic advantage that many countries can only dream of. What's happening now is not just about fuel. It's about global power. Canada is proving that it no longer has to rely on one trading partner. It's expanding its influence, increasing its profits, and positioning itself as a major force in the global energy market. The U.S., once dominant in the North American energy scene, is now scrambling to keep up. And it all started with one major spark: a threat of tariffs from Donald Trump. That single moment may have pushed Canada into China's arms faster than anyone expected. Now, with hundreds of billions of dollars in future energy deals on the table, the landscape is changing fast. The energy game has new players, new rules, and Canada is no longer just playing along. Thanks for watching and staying informed with us. If you found this deep dive valuable, be sure to subscribe and keep up with more impactful insights.